In this episode, I would like to discuss about the concept whether the partnership firm is a person or not. Just earlier episode I have already discussed about the essential elements of the partnership firm. So, in this episode my topic is that whether the partnership firm will be considered as a person in the eye of law or not. In order to understand the concept whether the partnership firm is a person or not, we have to go through the section 4 of the Indian Partnership Act. I have already discussed in my earlier episode in details about section 4. So, section 4 of the Indian Partnership Act 1932 deals with this aspect. It states that partnership is a combination of various persons who actually entered into an agreement to carry on any business and for the purpose of profit or gain, and who are individually known as partner and collectively the firm. So, it means that partnership where sharing of profit is essential and carrying on business and the purpose is to achieve the gain. So, it can be said that it is the combination of the labor, skill and property of the persons who have invested and who are running the business, and ultimately they are sharing the profit. So, illustration can be given that A and B both have purchased 100 bales of rice and they have agreed to sell it out in market, and whatever will be the profit, it will be pocketed by them. So, this is a simple illustration of the partnership. Similarly, if A agrees with B that A will purchase the gold and it will be supplied to B, who is the goldsmith, and when the work is done it will be sold out in the market, and whatever will be the profit, it will be pocketed between them. So, this is a clear case of partnership. So, partnership, it is actually the manifestation of the group of persons who are individually known as partner and collectively the firm. So, now the topic is whether partnership firm will be considered as a person in the eye of law or not. So, in this aspect I would like to discuss first that what are the various types of persons in the jurisprudential point of view. There are basically two types of person in the legal jurisprudential point of view. First is that the natural person, like we human being, we are the natural person because we can enter into contract with others, we can sue any person, we can be sued by the others. So, we are actually the natural person, but apart from that there is another separate entity, distinct entity, which is denoted as artificial or legal existence. That means it is also person, artificial person or juristic person or legal person having the synonymous meaning. So, this artificial existence example is like company. Company is considered as a person in the eye of law because company has a separate corporate existence, and company can enter into a contract with its own capacity. Company can sue any person, company can be sued by the others. So, company having a distinct identity apart from the identity of the members, board of directors, shareholders, but it is not same in case of the partnership firm, because partnership firm is the manifestation of a group of persons who are individually denoted as the partner and collectively the firm. And section 4 also states about that each firm having a distinct name, that is the firm name, like Messrs. Sri Krishna Enterprise or Messrs. Ma Durga Builders, but whether it bears a name particularly, so whether thereby it is becoming a separate person in the eye of law, but the section 4 it will be considered along with the other section, means that is the General Clauses Act 1897. Section 3 subsection 42 of the General Clauses Act, it defines the word person. So, by virtue of section 3 subsection 42 of the General Clauses Act, person means that is a group of individuals. So, it may be like any means company or any association or body of individuals. So, any company, association or body of individuals, whether incorporated or not, they can be considered as a person in pursuance of the General Clauses Act. So, whether partnership firm will be considered or not, that is the I will discuss about this aspect now with the illustration of some cases. So, let us have a look that as I have stated that section 4 which defines the very term that partner, partnership, firm or firm name, as well as that is section 3 subsection 42 of the General Clauses Act 1897, but it is not clear if we go through these two sections that whether partnership firm is distinctly considered as a person or not, like in case of the company. Now, I would like to discuss with some case references of our apex court, that means Supreme Court. Now, I would like to discuss about one prominent judgment, that is Dulichand Lakshmi Narayan versus CIT or Commissioner of Income Tax. It was decided in this case by our apex court regarding some essential points relating to the partnership laws. So, court stated here that General Clauses Act section 3 subsection 42, as I have discussed right now, it will not be applied in case of the partnership. That means partnership is not coming within the purview of the word person in pursuance of the section 3 subsection 42 of the General Clauses Act, and Supreme Court stated that if we give the meaning of the partnership or if we consider the partnership firm as a person in pursuance of this act, it will be repugnant or contrary to the partnership laws. So, that is why court decided that partnership is certainly not coming within the purview of the definition person in pursuance of the General Clauses Act. And moreover, court decided that partnership firm, though not a person in the eye of law, but for the purpose of the income tax and sales tax purpose, it can be considered as a person. That means it can be taxed in pursuance of the income tax and sales tax law. So, what appears to us from this judgment that partnership firm, though not a person in strict sense of the term, but it is separately or distinctly accessible. That means firm is separately or distinctly accessible and partners are distinctly accessible for the purpose of the income tax and sales tax purpose. So, let us have a look that as I have stated here, the important case, that is Dulichand Lakshmi Narayan versus CIT AIR 1956 Supreme Court judgment. It is very relevant with the context. Now, I would like to discuss about the next landmark judgment, that Munsiram versus Municipal Committee. In this case, it was decided by our apex court that whether the partnership firm can enter into the business with other partnership firm. So, that means the question raised that whether a partnership firm can be considered as a partner with the other partnership firm. So, it was decided by the court that partnership firm is not considered as a person in the eye of law, because section 3 subsection 42 of the General Clauses Act 1897, which defines the very particular term person, the partnership firm is not coming within the purview of this term person in pursuance of the General Clauses Act. So, as such, partnership firm cannot enter into the partnership business along with the other firms, whereas a company can enter into the partnership business with the other partnership firm, because company has a separate legal existence. It is an artificial or having the corporate or legal existence. So, as such, company is considered as a person in the eye of law. So, a company is competent to enter into the contract with any partnership firm, but a partnership firm cannot enter into the business with other partnership firms. So, it was decided in this case that Munsiram versus Municipal Committee 1979 Supreme Court cases. So, a partnership firm cannot be a partner of other partnership firm since it is not a legal entity. Now, I would like to discuss about another judgment, that is Wise versus Perpetual Trustee Company. It was observed in this case by Lord Lindley that whether a club can be considered as a partnership firm or not, because we know that in club it is associated with various members, various persons have joined as a members in a club, and the club is carrying on any activity, whether by virtue of this a club can be considered as a partnership firm or not. This was the question which was decided by Lord Lindley in Wise versus Perpetual Trustee Company, and it was observed by the bench that a club cannot be considered as a partnership firm if it is not carrying on any activity of any profit making. So, we know that in pursuance of the partnership, the profit making is the mandatory. So, unless there is the profit making purpose, it cannot be considered as a partnership firm. So, a club can be considered as a partnership firm only in case that club is carrying on any activity of profit making, otherwise not. But if it is not carrying on any profit making purpose, then it will not be considered as a partnership firm. So, it was decided in this case Wise versus Perpetual Trustee Company by Lord Lentley that if the club or any organization is carrying on any activity of profit making, then that can be considered as a partnership firm, otherwise not.